What's up, guys? Can somebody give me a volume check? Can you guys hear me? This guy, what's up, Arthur? Can you hear me, bud? All right, volume good, sweet. Um, all right, so we'll get started with it, guys. It's the start of a new week, and we've had some absolutely insane weeks, really all year. And this week turned out nice for us as well. Volume a little choppy this morning. The market, as tends to happen on Mondays, you don't know kind of what dominant theme that you're going to have, but we had some nice movers today. Um, so I'm going to go into as many questions as I can. What's up, bud? But the purpose of this video is I'm going to give you guys kind of a little walkthrough through my daily strategy, kind of what I'm doing. And I'm going to give you some tips that I think might help you guys on trading the volume movers, how to really be profitable each and every day. Granted, this is not nothing I tell you is going to be like 100% foolproof. There's going to be red days with any kind of strategy, but I'll kind of at least tell you guys what I'm doing, and hopefully you can take this and have more green days than red. So, yeah, one second. Let me catch up with some of you guys here, and then we'll go right into it. Let a few more people get in, and then that way. Oh, the beard's clean. Thanks, dude. I got a new barber where I'm living, and she's doing a really good job. It's finding a great barber when you move somewhere. It's one of the hardest things that you can do. So I'm happy with this girl. She's doing it pretty good. So we'll stick with her for a while. But yeah, one second. All right, so kind of my daily routine, guys. And if anybody has watched any streams that I've done before, then you're going to kind of know already what my daily routine is. But it wouldn't hurt for me to recap over with you guys. And if this is your first stream watching with me, then I'll kind of tell you my routine and kind of what I'm looking for each and every day. So, first off, as I've said many times, I'm primarily a day trader. I know a lot of people are swing traders. You swing for run-ups, doing the spot plays, and you hold for a while, which you can make a lot of money doing that. With me, the way that my style has always been is I just love day trading, capturing the moves intraday with the volume, and doing that 5 days a week and locking in profits each and every day. And for me, the benefits that I see in doing it that way, I preach to you guys a lot about taking size and really growing your accounts. And if you're confident on a play, going large size on it. And I feel like, if you do take the day trading route to where you're closing profits each and every day, that really helps you compound your account quickly. And then each and every play that you're getting into, then ideally, if you're trading right and you're having winning trades, then you're going to have more and more money quicker to go larger on your next play. Whereas if you're holding something for weeks at a time, then you can make a lot of money, but it's going to tie your account up for a little bit. And if you have a smaller account, just be aware that you're going to miss out on some plays. So for me, one of the benefits that I see of being an intraday trader is, you're closing profits each and every day. And then the next day, if you're growing your account up, you have that much more money to put into the next play. And, 25% on, let's say, a $10,000 account is not going to be as much as 25% on an $11,000 account, and so forth. You just keep going up and up. So that's why I love intraday trading. So with that being said, now that everybody knows that I primarily do intraday trades, I will swing stuff from time to time if it's a good setup. I'll throw a portion of money in it and let it ride. But on a typical day, what I'm doing is, I don't get up in the crackhead hours. As you guys know, I don't get up with the Weeble boys and just run stocks at 4 a.m. in the morning. I would much rather be sleeping, just getting rest and getting at it at 7. well, I don't even get out at 7. I wake up about 7:45, and I get to the desk about 8. So what I do is I wake up about 7:45. I come to the desk at 8, and then the first thing that I'm doing, guys, is I'm pulling up Trade Ideas Scanner. Let me. Oh, Rocket's finally off his OnlyFans, and he has time to do a stock stream. Imagine that. Let me pull up my trade ideas for you guys here. Get my pre-market scanner up and going. That way, this can be accurate for you guys. Sorry, Rocket got me all off track. But here's what I'm doing: is I'm waking up, and the first thing I do is I sit down, pull up trade ideas, and this is what trade ideas is going to look like. And this is going to be my morning scanner. This really, guys, what I'm looking at here is the up gapper list. And, this is going to be different now than what it was this morning. But, I'm looking for like the top 5 to 6 stocks on here. That's going to be my main focus early on, is these up gappers. I actually did trade BSQR today. I traded NXTD today. That was a nice Bitcoin play. I traded Vissel today. There's a lot of these that I traded today, but the down gapper list is spooky. Yes, it is. Truth be told, I pretty much ignore the down gapper list because each and every day I want to trade something that's actually moving in an upward trend. Because, there's some people that it's bizarre to me. Like, I try to tell people all the time, the trend is your friend. Like, if something is trading up, then why would you not want to trade that too? If something's going up, then ride it out until it starts going down. I mean, if something's in an upward trend, I kind of want to be involved in it because I like making money, and it just makes sense to me. If something's going up, I want to be in it too. So for that reason, I do trade the up gappers, and that shows me kind of what the theme is going to be of the morning. So that's step number 1. So I just use price action and setup. Not always. So again, guys, like all right. Are we good? All right, I think I'm back up. That damn hamster stopped right. Guys, I'm telling you, like, I have probably way too expensive internet, but when I do these streams, like it just goes down on me, and I'm sorry about that. But anyway, so no, I don't exclusively trade the up gappers. Like, there are some other things that I'll look for. Like, with being a trader, I mean, and this is what comes in during experience. You got to kind of know what theme that you're in. Like, if Bitcoin is moving, then that's something that might not necessarily be on the up gappers yet. I mean, more than likely there'll be a couple on there, but if you know Bitcoin is moving, then you got to look at Bitcoin stocks because it just makes sense. If Bitcoin's moving, then the other Bitcoin stocks are going to start moving. And a lot of times I will look at previous runners from the day before. Like, if something was a great mover, like today, for instance, OCGN was a great mover. So even tomorrow, if OCGN is not on that up gapper list, which it probably will be, I would still look at OCGN because it was a nice mover today, and it moved Friday and after hours as well. So that's something that I would want to look at. Even if I don't trade it, I want to at least look at it to at least know what's going on. Yeah, OCGN was a baller, and I actually have that pulled up. I'm going to talk to you guys about that and teach you a little bit how to play sympathy plays here later, because playing the movers, I know Zach talks a lot about different stocks have different personalities, and there is some truth to that. So I want to kind of show you guys how to play the volume movers versus how to play sympathy plays. And how do I see what's happening after hours? Trade Ideas has a scanner for after hours as well, which personally I don't really do much after hours trading. To be honest with you guys, my girlfriend Madison, she says I spend too much time talking about trading, doing trading, anything about trading anyway. So a lot of times when I try to pull a quick after hours trade, she almost takes my head off. So, for those reasons, I don't trade much after hours, and I'm not a huge fan of after hours, to be honest with you. It's not the area where I excel in. I love intraday movers during the regular market hours, and I do trade pre-market as well. But anyway, if you do want to trade after hours, then Trade Ideas has that scanner for you as well. So anyway, after I come sit at the desk, I see what's moving, and for me, one of the benefits of starting at 8 as opposed, well, I would never ever in a million years start at 4 a.m. You're not going to catch me up at 4 a.m. Um, but for me, instead of starting at 7, starting at 8 kind of gives me that extra hour benefit that I can come sit down, look, see what news has already come out, see what's already setting itself up for the day, and see what's already moving. Because something that I feel like a lot of you guys don't understand, and girls, if there's any girls watching this stream, because there are female traders as well, something that, all new traders, it takes a while to understand is you don't have to be first on a play. You don't have to alert the play first. You don't even have to enter first to make a good trade on it. If it's going to be a good trade and a solid mover, then it's going to be a good trade all day long. So, if you miss the initial spike, if it's going to be a good trade, then there should still be entries for you to be able to get in on pullbacks. So let it set itself up to confirm that it's actually going to be a good trade and a good mover. And if you already know that it has that going for it, then just watch it for a pullback, catch a safe entry, and ride the next leg up. And that would save you a lot of money as opposed to chasing something like if news just comes out on something or like some random sympathy gets called, anything like that, and you're just chasing at random levels, like you don't even know why you're buying it, don't know where you're buying it at, then you might take some losses on those. But if you do wait for a pullback on a solid setup, then that's probably safer for you. So let me, for instance, I'll show you the difference between an actual volume mover, like the main play today, versus what the main sympathy play became. So, talk to us about proper strategies to triple zeros. I'm not sure what that means. Like, what do you mean triple zeros? Let's see. Buy high, sell low. I mean, if you're a bear, you want to buy high, sell low, but other than that, I can't imagine why. Um, what's your exit strategy? So yeah, the thing is, like, when your account size starts getting larger and larger, like I know a lot of you guys watched a lot of the YouTube videos that I was putting out last summer, and at that time I kept my trading account at 30,000. I was only trading with $30,000 at that time. So it was much easier for me to get out of positions with only a $30,000 account size. Now I got my account size. I was keeping it at 500,000 for the last little bit, but I think I'm going to start growing my account again and maybe take it to like a million or something like that. So now trading with a 500,000 account size, you can't get out at one single price. You just can't do it. I mean, if you tried, you would be the prick that is just market selling and crashing a stock, and nobody likes that guy. And it's just not possible to get all your shares out at one price anyway. So what I recommend you do is, of course, load all the pullbacks that you can get. Like, that's my big thing is, I'm loading pretty much every pullback on a volume play that I can find. So loading the pullbacks, naturally, that means that I'm going to have a large position size of something. Um, and I'm selling on the nice spikes. Like, when you get good at reading charts, you can look at the chart and see where something is probably going to go. And as it takes nice spikes up, scale a little bit into the volume. That way you're not selling on the bid, you're not crashing the stock, and you're selling lots up into the volume. You're locking profit in increments. That way you can kind of maximize the profit for that trade and safely get your account size out, without one worrying about completely crashing the stock. Because I mean, you want to have some courtesy to other traders. Like, if you can help it, don't crash the stock on anyone. But even more than that, like, let's say you don't care about any other trader whatsoever, and you're the trader, just, screw everybody, you're all about yourself. Even then, if you just try to start market selling and bid smashing, then that's going to screw yourself over too. Because one, you're going to have a lot of shares that when you start smashing it down, you're still holding a lot of shares that you're not going to be able to sell out for a nice price. So you're screwing yourself in the process. So for that reason, I recommend scaling out into profit on the spikes. So yeah, let's take a look at OCGN chart right here. All right. So this is the OCGN 5-minute chart. And if you guys have watched these streams with me before, you know that 90% of the time, I'm going to be looking at the 5-minute chart here. What are my trading goals in 2021? It's not really an account balance. I would like to make somewhere between 5 to 10 million this year. But other than that, I'm not really stressing it that much. But things I've treated myself, like, I don't really buy a lot of things. Earlier in the year, I bought a Jaguar. That's probably the nicest thing I've treated myself to yet. But anyway, back to the chart. So OCGN. Oh, this is an LG. I don't know the exact specs. I'll get that for you after the stream and post it somewhere. Anyway, so I traded OCGN today, and you can see, like, I do trade heavy share size here. So I traded a total of 140,000 shares. And on this trade today, I made a little over 21,000. But what I'm saying, guys, is OCGN was a nice mover today. It had legitimate volume. The volume bars here are like well into the millions down here. So this is some nice volume. And anyway, you get the initial spike at open. Let me actually zoom out a little bit. So, like I said, this was a runner on Friday as well. But, you're trending up all pre-market. You're kind of hanging out here. Then when the opening bell rings, you get this insane volume spike down here. So you get a lot of green volume pouring in. And that takes the price from down here below $9. And you come up to like almost 14. And then you're having a pullback. So you get the initial opening spike, and if you weren't in before open, then it might be a little bit risky to be buying right here, even though it's going up. In my opinion, the safer entry would be wait for this pullback. It hits almost 14. It can't break the $14 yet. And then it comes down. You test VWAP here. You get the wick down to the 1050 area. It holds VWAP, and then you start coming back up and consolidating. This is an entry point right here, guys. This is where you want to enter. You get the initial opening spike, you come down, you test VWAP, you don't break down below it. You hold VWAP, so this shows strength right here. So you're holding this. This is where you want to enter. So enter somewhere around, the 11 to 1150 range. Would be a great area to add. So you're in. You got this nice little area of consolidation right here. Not much going on. Really no sell signals. And yes, this is Thinkorswim. So there's no sell signal. And then, boom, we get more volume coming in. And we take a nice climb up all the way to 1877. Now, that was the main move. But within that main move, if you want to scalp over and over, or let's say you still miss this, then your next pullback entry would be right here when you can't break 15. Like you come up, you get to like 1490s, and you don't break 15. And these are just psychological whole dollar numbers that you want to look for in a move like this. You don't break 15 and you come back down. You hold this, which is the 9 EMA. This is a great indicator that I love to use for pullbacks. You hold the 9 EMA. This could be another entry. After you don't break 15 and you come down and you start consolidating just a little bit again. This is another entry. Although this entry is not as great as the first entry after open, but it is still an entry. This is a little bit more of an experienced entry. Like if you've watched these for years and years and you kind of know how stocks move, you would be comfortable taking this entry. So then you get the next move up and, you know, you don't break $18 this time. You get the move up, you don't break 18, you come back down, identical to right down here, guys. You hold the 9 EMA, and then you can enter right here and catch the next ride up to almost $19. And that was kind of the end of the move. So after that, you get this really big red candle. This is really the first clean break of that 9 EMA that we see. Because if you look on the way up here, we've never had a clean break of the 9 EMA. If you look, all of these wicks have come down and touched it, but they never had a clean break of it like this. So, you know, that's kind of an indicator that, you know, it might be over for now. So you get that break, you bounce just a little bit, you can't break back above the 9. You still can't clear the 9 EMA, and then you come down again. Breaking the 9 is why I didn't get back. Yeah, I mean, that's a pretty obvious ugly kill candle right there. I mean, that's the biggest red candle that we've had up to this point out right there. Now, let's go look at the sympathy to OCGN. The sympathy to OCGN today, the main one was OPGN. Now, a little different in the day. I ended up with a little over 15,000 profit on OPGN. So with this one, let me show you the difference. So you see here on OCGN how this was the main mover, and it kind of gave several entries, nice healthy pullbacks along the way, and kind of stair steps up. The sympathy, sympathy is kind of like, you know, you would expect a very similar stock to something that's moving like OCGN to get the sympathy volume off of OCGN. So anyway, you look at OPG in here, and you can see it's going to move a little bit different because this is the sympathy. You're not going to have the nice stair step up patterns that you have on the volume play. It's pretty much straight up. With the sympathy, it's just volume is chasing. Like a sympathy is really a chaser's play. You can make money on them, and I do trade them, but you got to understand these are less technical than the main mover play. It's just kind of getting in as early as you can on the sympathy plays. So you can see they're way more straight up. Like it is just green candle after green candle. And then we come up here, we can't break the $5 area. You know, we kind of form a quadruple top up here at 437. And we kind of consolidate right here. And then what we get is this huge red candle right here. And this is, you know, a clear indicator that we're done. This is really the first major pullback on the sympathy play. And, you know, it's not a nice, neat stair-step pattern. It's just, boom, everybody's done with it, and we're gone. You know, you break down below the 9, VWAP, the 20, and we just straight up start trending down. So that's kind of a play-by-play of how you would play the volume mover versus a sympathy trade. Now, I love playing sympathies. Like, you can make a lot of money off of a sympathy play, and they are profitable, but you have to know how to play them. With the volume main runner, it is what it is. The volume's already there. It forms nice patterns for you, and it's just trading the volume and the patterns while you have it. With a sympathy play, you're hoping that since this main mover is moving, this other one is going to start moving, which is what happens. That's why we have so many green candles, because everybody's trying to get in before the move either happens or ends. So that's kind of the difference between a sympathy play and a volume play. So I'm going to go through and read some questions right now and answer as many as I can here. Do I pay more attention to the chart and technicals over level 2? I'm a volume trader, so level 2 and time and sales is kind of the main thing that I'm watching, because if you know how to read volume really well, then that pretty much tells you what the stock's about to do. Like, if you are really good at reading volume, you kind of know where the move's going to happen. But, if you're not so great with reading volume yet, then the chart is a great thing that you should look at, which, I still look at charts for every play that I'm doing. The charts are just a more visual of kind of where it should hold or where it could go. But me, I mainly play reading the volume. That's kind of what I really enjoy doing. Do I ever buy the initial spikes? Yeah, I buy the initial spikes all the time. But you guys got to remember, I've been doing this for years now, and I am over PDT, and I feel comfortable with my strategies, and I'm great with my risk reward setup, that I will buy the initial spike, knowing the risk that I'm taking, and I'm okay with it. But if you're newer, then I do feel like buying the pullbacks are safer. And then that's why I suggest buying the pullbacks, because they can be safer for newer traders. But, on the flip side of that, some don't have pullbacks. And if you miss that initial spike, then you kind of miss the play. And if you miss the play, then you just got to deal with it and wait for the next one and not chase it. So which volume indicator are you using? Yeah, the different colored volumes that I have. It's a script that I have. I've had it on forever. I'll look after this and see what the script's called, and I'll get back to you guys on that one. Yeah, buy the dip is your only strategy. Buying the dip is a safer strategy, and for the longest time, that's what I primarily did. I do buy a lot of breakouts now, but you can't go wrong buying the dip. Yeah, I do use Active Trader. That's how I execute all of my trades, is Active Trader. Because you literally just point and click at whatever price you want, and you're in or you're out. Unless TD Ameritrade is on their BS again and decides to crash on us and go down at open almost every morning and cost me $40,000 a day. But that's a different matter. But other than that, Active Trader is really good. Yeah, new opportunities every day in the market. That's the thing, guys. With being a day trader, there's going to be an opportunity every single day. And if you miss out on something, it's not like that's the last possible trade that you can ever trade. Because, it's all the trades that I've done in my lifetime, they're not even going to compare to all the future trades that I will do, because, I hope to be alive for several more years if possible. And I'll be doing way more trades the rest of my life than what I've already done. So there's no need to chase any one single trade. Let's see. What else do we have? Yeah, I do use the 920, the 50, and the 200 indicators. Yeah, I don't like Webull level 2. Webull is a great beginner broker to get you into trading, but if you're going to be trading all day long, if like that's your full-time job, and you're sitting behind the screens, then I think it would be smart to, as much as I just trash TD Ameritrade, transition over to TD Ameritrade or some other major broker like E-Trade, TradeStation, or something like that. Let's see. How do I scale out my size? Yeah, I explained that a little bit ago. Like I'm scaling out on the spikes. Like when we make new highs or you have a nice spike up, then I'll take a little bit of profit off just to be smart and lock some gains in. My PC setup. 1 second here, and I'll show you. My desk is an absolute mess because my mental space is usually a mess. So I keep Twitter pulled up right here. That's going to be this one. I got charts right here. I got my trade ideas right here. I got Discord right here. And I keep some news right here. And I do use scans for news. And it's no certain percentage. Like, the thing about day trading is it's not like there's set rules that you have to take this percent out in scales. Like it's whatever you want, like whatever you're feeling. Like if you want to take 10,000 shares off, if you want to take 5,000 shares off, 20, there's no set rule as to what percentage size that you should be scaling out at. Yeah, and that was Atlas Trading. Let's see. Do you have a concrete stop loss that I exit at? By concrete, like I mean any trade that I'm getting in, then I know like my bottom number. If it breaks whatever price level, then I know that the trade's going to be done at that point. So that's when I would exit if it breaks like the last level of support. So that would be my bottom number. 1 second. So if you're a complete beginner, where do you start at? So what I would do is no matter what your current financial situation is, start with like no more than $1,000, something small, because listen, with trading, guys, it's different than anything that you've ever done. And I don't care how smart you are, if you've like absolutely just aced every class you've ever done, like just done excellent at anything that you've ever done. Trading is something different, and it's going to take time to master it. So, I mean, I feel like most people that trade are fairly smart individuals to begin with, but there is a learning curve, and no matter if you're in Harvard, no matter Yale or any of the other fancy Ivy League colleges, this is something different that is going to take you time to master. So start with like $1,000, no matter if you're a millionaire or you just have money that you want to throw out the window and burn. That's great. Start with $1,000 because there's going to be so much that you have to learn to get the feel for this. So what I would recommend, one, if you haven't heard of it already, utilize finviz.com. That's a great beginner screener to kind of show you, like if you don't want to buy trade ideas every month, I get it. Go to finviz.com. It's a little bit delayed, and it shows you what's moving on the day. Like it will have most things that Trade Ideas has, just not nice and neatly organized. It'll have most things for you, like on like a 15-minute delay or something like that. So go to FinViz, see what's up on the day, and then whatever broker you have, pull those tickers up on your chart and watch how they move. Like if you're day one beginner, just spend a few days watching how things move, to kind of get a feel for how stocks move. And then after that, like let's say that it's oil plays that are moving or weed plays, Bitcoin, whatever. You can also click that ticker on FinViz, and then it will also have a little hyperlink for the same sector. So you can click on that to get yourself familiar with other tickers in that same sector. So, you can start learning the other tickers. Like, we talked about that Sympathy play. This is how you learn Sympathy plays. you go find the major mover and then start looking for tickers that are similar to that. Um, so I would start with that. Like if you're day one, just, go to FinViz, see what's actually up on the day and watch stocks move. That would be day one starting. And just, do that for, it's going to take you guys a long time. I mean, if you're like starting day one, but you think, I mean, any profession that you're going to go to, like, if you're trying to, whatever specter that you're trying to get into in life, like let's say that you want to be, making doctor, lawyer money, whatever, it takes years and years of college and practice to earn the type of salary that you can make doing those professions. If you become a good trader, your income is going to be more than what a doctor or lawyer is making once you become good. So it only makes sense that you would have to spend an adequate amount of time studying and learning the markets to get to that level as well. The thing about trading, the great thing and the not so great thing about trading is the same thing. It's easily accessible. Anybody can start today or tomorrow if they want to. You can open up a brokerage account and start trading. Um, and that's great because, it's an even playing field. Everyone has access to trade the stock market. But you got to remember, whether you're day one trading or whether you're 50 years trading, everybody trades the same stock market. And, you're trading with and against everybody collectively. So it would be very easy for somebody that has 50 years of experience to, I mean, just completely wipe you out of the market because you don't have time in the game and you don't know what's going on. And that's just natural. That's with anything. Like, if someone came and told me right now that there's a patient down at the hospital and they need a surgeon right now, and I've watched Grey's Anatomy one time in my life, and I know like how to put a surgeon mask on, so they want me to come in and be the surgeon, they would die. Like I would have no idea what to do. That's the equivalent of day one traders. Like you don't know what you're doing, and it's very easily to get wiped out of this market. So treat it as a profession, approach things strategically and slowly, because I mean, you can make a great life for yourself doing this if you do it correctly. And you don't want to just overshoot things and think you're an expert from day one and blow your account up before you ever get started. So that's my advice. And in the beginning, when I first started trading, like it was a disaster. I mean, I had no idea what I was doing. I was losing money on most days. And it's natural because I had no idea what I was doing. And the longer that I stayed in the game, I kept my account alive. Then I realized, hey, I don't need to be in every single trade right now. Let me just take the good trades. Like anything that's moving, I don't necessarily have to be in it. I'm going to wait for the right one to come to me. Um, so let's see. Where can you go to read volume? Really volume comes through level 2. And I use the level 2 on TD Ameritrade's Thinkorswim. The level 2 box shows me all of the orders coming through, and that's reading the volume. So whatever broker that you have, just look at the level 2, and that shows you the volume coming through. Let's see. Yeah, I do margin account. Like I don't like a cash account for the simple reason that you can't get around the PDT rule no matter what, because with a cash account, it's going to take your money like 2 days to settle anyway. So it would still work out to where you have like 3 trades a week, sometimes less if your money doesn't settle on the right day. So just stay with a margin account. Is that how I determine what to trade each day? Yeah, I mean, I first look at the up gappers on trade ideas to show me what I'm initially going to trade. And then after that, like if it's like an absolute, let's say it's a Bitcoin day, then in my head, I already know a list of Bitcoin tickers that usually like to run. So then I'll start going and looking at those tickers actually before they hit the scanner. So that way I can be ahead of the volume. And that's things that come through experience that you're not going to find any of those things on any scanner. How do I fight FOMO? I mean, in the beginning, it's hard, but just to be completely honest with you, like once you've been trading for a while, and I mean, you've proven yourself to be profitable and you make money each and every day, I mean, you're really not going to care that much about missing out on a trade when you'll just make another winning trade tomorrow and make just as much money. So it's just having confidence in your overall strategy. How old am I? I am 26. Um, yeah, make watch lists for different themes. Like have different watch lists set up in your broker, and then you can just cycle through them and see if anything's getting hit. Do I ever buy pre-market? Yes, I do buy pre-market. I trade pre-market every day. It is a little bit tougher than regular market hours, but I do trade pre-market. Um, yeah, I mean it doesn't matter how old you are or how much you're making. You want to view it as just another number on the screen. Really kind of detach yourself from the money. That way, it is what it is. It's just a number on the screen, and just trade the trade, and it doesn't matter. Like money's not real anyway, but it's really not. Um, how do you keep from getting married to companies and waiting for the long-term 300% gain? Because like I said, I'm a day trader, so I'm really not holding things for that long because I take my gains each day and then I roll right into the next trade and I repeat that all day long. And I'm making a nice living doing it that way, and I'm cashing out each day. Um, what EMAs do I use? The 9 EMA and the 20 EMA. For SMAs, I use the 50 SMA and the 200 SMA. Thanks, Nicholas. You're welcome. I do enjoy, helping you guys out, like sharing what I have for you guys, and because it's hard when you're a beginner because literally there's so much to learn that it's almost overwhelming. Like you don't know where to start. But in my experience, just keep it simple and take it one step at a time. Don't try to overcomplicate anything. Just I've seen some charts that people have, and literally there are so many indicators on the chart and so many lines, and I can't see the candlesticks. Like I can't see where the stock's at because they have so many indicators. And that many indicators is not going to help you if you can't even see where the chart is at. And there's no one all end all like best indicator. It's just whatever you can read really well. So the least amount of indicators that you have, that's the best. You just want to focus on price action, the levels on the chart, and a couple key indicators. Um, yeah, I do swing trade some guys. I don't exclusively day trade. Like, I mean, there's plenty of times that I will overnight something. I'll hold it overnight for the move up the next morning as well. But for the most part, I would say 85% of the trades that I do are day trades. So that's for me. How long did it take me? I lost, it was right around a year before I started making money. So yeah, I definitely lost almost consistently for a year before I started making any money. Um, which candle times? Primarily the 5 minute, but I do use the 1 minute when the 5 minute doesn't make sense. And by doesn't make sense, I mean if it's kind of floating in the middle of nowhere, like if it's not on any indicator or anything, then I'll switch over to the 1 minute and see if it's closer to some sort of indicator. Um, so let's see. Do I think this market is sustainable? Yes, I do actually. And there's a lot of talk going on, like, hey, is the stock market going to crash? Like, for all of eternity, guys, there's going to be the talk. Okay, there's two talks that you're going to have. Um, I don't. What do you mean by 2 years? It took me 1 year to be profitable. But anyway, there's two constants in life that people are always going to talk about. One, the end of times are coming very soon, like the world's about to end. Two, the stock market's going to crash. You know, we're still here, and the stock market's still here. And the thing is, guys, even if the stock market does crash, then it's not going to stay down forever. It'll go back up. But even if the market stays on a downtrend for a couple years, as traders, there's still going to be plenty of opportunities to make money. Like even if the market crashes, then there's going to be a few stocks that are going up every day and you will be able to make money on. And that's the cool thing about being a trader is literally like, at nighttime you're out of all your positions. I mean, it doesn't matter if the whole market goes down. You'll wake up the next morning. If the whole market's crashed, then great. You got all kinds of dip buys. Just grab them all up real cheap and make a lot of money the next day. Um, uh, what's up, India? So yeah, if the market crashes, it is what it is. But this type of market being sustainable, I do think it is. Now, like if you're talking about GameStop and AMC, I don't think that is sustainable. That was, you're not going to have moves like that every day. That was just a rare, weird experience that hopefully we're done with. But yeah, I mean, as traders, you're always going to have opportunities to make money if you learn how to actually trade. Let's see, what else do we have? Yeah, mainly I learned from my mistakes. I mean, experience is going to be the best teacher. I mean, if you do something wrong enough times, then you're eventually going to learn to stop doing that and try something else. And if that doesn't work, you do it wrong a few more times and then move on to something else. Then you finally do something that works. Do I ever short? No, I don't short stocks. I'm a perma bull for life. I could not imagine the lifestyle of shorting stocks. I'm an optimist, guys. Like I'm an optimistic person, and I will always find opportunities to make money on something going up. I love squeezing the bears. Like if I know somebody's shorting something, like nothing makes me happier than helping contribute to a short squeeze and making the shorts cover. But no, I don't short stocks, and I don't play options. I just trade stocks. And what kind of lawyer did I want to be? I wanted to be a defense attorney. That was something that was really interesting to me. Is I wanted to do defense law. Let's see, what else do we have? Do I prefer? Okay, so confirmation of a bounce before getting the dip. If you're newer to bounce plays, then yes, that would probably be the safer thing to do. Wait for something to stop dipping and then, start going up a little bit. But the problem that you could run into with that is the move happens so quickly that you don't have a chance to get in on the dip and it already jumps up like 20 cents before you can get in. So when I'm buying the dip, a lot of times, again, this is riskier and you are going to lose on a couple trades doing this, but when you time it right, then it's very profitable. When something's going down, I like to be buying the panic and the fear. Because if it's a stock that's trending up and I see it, coming down, approaching certain levels, then I'll go ahead and start buying on its way down because I usually have a pretty good feeling that some level is going to hold it and I don't want to miss the complete dip entry. So I am buying a lot of times on the way down. But that comes, you got to know your risk when you're doing that because there are going to be times that you buy the dip that keeps on dipping and it could cost you some money. But that's kind of how I play it. No, I don't use Fibonacci. I've never used the Fibonacci lines in my life. Again, that goes back to my philosophy of don't overcomplicate things. Not hating on anyone that does use Fibonacci lines, but for me, it just makes my charts look ugly, and I don't think they're necessary, but I do know some traders get value from them and trade with them, but for me, I don't use them. Yeah, I don't really mess with any OTC stocks, so I don't really know anything about the OTC market. Let's see. Yeah, let the winners run. You get better at that. I mean, sometimes I take profits a little early on things. But one thing that can help is, maybe take half of your position out. Like if you're in a winning trade and you just have that urge to lock it down, then what I would recommend you do is go ahead and sell half of your position when you just absolutely feel the urge. Sell half of your position and then put a stop loss at your entry point. That way, no matter what, you're going to make money on the play. And it still gives you a chance to let the winners run. So that's what I would recommend that you do. What do you think is your strength to be this profitable in the stock market? I mean, strength, I don't know. I feel like I'm really good at controlling my emotions, and I usually take good risk reward setups, and I just, like I said, I completely remove myself from the trade. Like I don't think about it as actual dollars that I'm spending. I just view it as numbers on the screen. So I completely kind of remove myself from the dollar amount and just pretty much stay emotionless. I was not holding OCGN Friday. So like I said, I don't do much trading in after hours, and OCGN started moving in after hours on Friday. So, I just traded the volume today. I missed the real cheap entries, but like I said earlier in this stream, if it's a good play, it's a good play. I mean, if it's, this went to $18.77. Now, let's say I had the mindset that Friday it was $5, and I'm like, oh my God, Friday it was $5. I don't want to be buying at $11. Then I would have missed $7 of profit right there because, I would have thought that, it wasn't a good entry anymore. You just trade the volume that's in front of you, and just when you trade the volume, as long as it's moving up, you're in. Let's see, what else do we have? What is my max or full share size? Well, I mean, as of right now, let's see. So, like I said, I keep my account usually at 500,000, but I am going to let it grow again. So, I'm not going to take any profits this week out of my account. So now I have 567,000. So that would be my max share size. I tell you guys, I mean, trade with size and go heavy, and that applies to myself as well. I mean, if I'm comfortable in a play, I don't know why I wouldn't go all in on it. Set a stop loss. If it hits, it hits. But if it goes, then I'm going to make some real money. Let's see. OPGN. OPGN did work. But, when it drops, it drops. Like, I still ended up closing with a little over 15,000 on OPGN. I was up more money on it, but when it started dropping, I gave some back, and the play was over at that point. But like I said, when you're playing the Sympathy, then when it ends, it's abrupt. And it's a clear sell signal when it happens. It's sharp and fast. So that's kind of what happened with that. But it did go from $2.50 to $4.37. We just couldn't get the break to $5. How many tickers am I in per day? I mean, I'll trade a lot of tickers each day. I mean, anything that's moving, I'll trade it. But I'm usually only in a couple at a time. I don't scatter my money out between like 10 tickers at once. I try to trade heavy in 1 or 2 tickers at a time to get the most out of each trade. Let's see. Yeah, that's what I was just saying, Jake. Go heavy in 1 or 2 at a time, because if you scatter your money out between 10 tickers, let's say that you have $1,000 in one ticker, and let's say that it runs 100%, you're only going to make $1,000 because that's all the money you have invested in it. But if you had $10,000 invested in that one ticker and it runs 100%, then you make $10,000 versus $1,000. So really, you'd be doing less trades but making more money, which is ideally the goal. So that's another reason that I do trade heavy in each trade that I take. Let's see. when I take profits, do I have to stop trading for 3 days for my funds? I don't. I mean, I'm over PDT. I mean, I get my money instantly. If you're on a margin account, then you won't have to wait any amount of time for your money to settle. Like even if you're below 25,000, if your account is a margin account, then you'll have access to trade with that money immediately after closing the trade. Um, let's see. Biggest resource for learning level 2, literally just spending hours watching the market open, watching level 2 on Thinkorswim. I mean, that's the best way to learn anything, is to actually watch it happen live time. And that's how you learn. Let's see. How do I determine my stop? Like I said, when I'm trading something, I'm either taking it off of like a support bounce level, like maybe the 50 SMA, or maybe the chart itself is in some sort of pattern, and I have my own support line drawn. And if it breaks that level, then that's where my stop is. How long am I in a trade? It depends on the trade. Like it depends on how long it takes it to move. I'm in the trade until the move happens or my stop loss hits. And it's different every trade. I could be in for minutes. I've been in trades for seconds before. Sometimes I'm in for hours, or sometimes I hold for days. I mean, like I said, there are some things that I will swing trade. And do I aim for a certain dollar amount a day? Not necessarily. Ideally, I would like to, make sure I'm hitting like around 50,000 a day, but that's not like a hard set and fast number. Like I trade as long as the market feels good. If there's opportunities to take, then I'll take them. If the market is just completely dead and nothing's happening, then I'll just leave early. So, setting my stop on Thinkorswim. What I do is, I literally find what price my stop loss is going to be, and I go to my active trader, and I just click that price, and it sets the stop automatically for me. How do I avoid forcing trades? It's something that comes with time, and like I said, eventually the FOMO starts to fade, and you don't feel the need to be in every single thing moving. Let's see. Let's see. Are your strategies buy the dip and breakouts, or do you have any other strategies? I mean, the most important thing you want to do is buy low, sell high. So buying the dip is a really good strategy for that. Other than that, I mean, if there's a sector that's moving, like if Bitcoin's moving and, let's say today, it's early, Bitcoin's moving, NXTD hasn't moved yet, but I know it's Bitcoin, then I'll go ahead and slap some shares into it because it's a Bitcoin stock too. Yeah, volume. I mean, if I see volume coming into a stock and it looks significant, then I'll go in. But yeah, the max amount of shares I buy at entry, every how many I can afford, and that's different for any stock. I mean, whatever the price is, every how much $500,000 will get me, that's what I'll buy. But again, that's if you're comfortable taking size and you're comfortable, with your risk reward. Who is this Crypto Frederick guy that's spamming with the Bitcoin exchanger, whatever? Yeah, I'm not talking about crypto, and I don't really want to watch your video. So thanks, Robert. I appreciate it. Yeah, I mean, I don't get gooned sometime, guys. How do I decide to take profit before or after the trade? So yeah, like I said, if you guys follow my Twitter, then you see me post a lot of tweets saying, over whatever price should see whatever other price. And that whatever other price that I'm giving out is usually one of my first profit signs. Like if it hits that price, I'll take a little bit of profit. If volume after it hits that price is really strong, then I'll just ride in for as long as the volume is there. But like I said, as a trader, then the most important thing that you can be is adaptable. Because if you're not adaptable, then you're not going to last for a long time in the game. And by being adaptable, I mean, if you see the volume starting to leave, then you got to leave with it. Like if you see mass sell-off happening, then you got to roll out too. Or if you see accelerated buying come in, then you got to hold on and ride it. And these are things that no trader or no guru or whatever can like tell you exactly what's going to happen, because where it hasn't happened yet, the last I checked, none of us are fortune tellers or have crystal balls. So we don't know exactly how many buys are going to happen or exactly when people are going to start selling. You just got to watch the volume and be ready to adapt on the fly. Um, Sometimes I give a price target and it just completely blows past it. And sometimes I give a price target and it doesn't get there. The price targets are just where it should hit based on what the chart level says. But again, there's always factors that can come into play that we can't see until it happens. Clove is a bust. Yeah, I don't know. I haven't traded Clove. I haven't really kept up with it, so I don't really know that much about it. So I have no comment on that one. So the volume leaves, you leave, like, by the volume leaving, I mean if, like this right here, I'll show you again. So like OPGN right here, this is a very clear indicator, this red candle right here, and it corresponds with all of this red volume, like right here, that people are selling this stock. I mean, that's a pretty big knife right there. If that's happening, then there's no reason to just hold it all the way back down to here. I mean, when it happens, it happens. I mean, the best thing to do is just accept your loss and go on. And like I said, nobody can foresee something like that happening. Let's see. I'm going to answer a couple more here, and then I'll have to sign off for the night, guys. When you were under 25K with PDT, how did you best manage your account being limited to only a few round trades a week? Yeah, so this is a struggle that I feel like a lot of people have. So when you are under PDT, it's important to be very selective. And this goes back to me saying you don't have to be in every trade that's moving. Just focus on the really good ones, things that might already be in trend, or if it's another stock that fits the theme of the week or the day. Like if Bitcoin stocks are completely exploding and somebody calls out, or you see a Bitcoin stock that hasn't really moved yet, that might be a good trade to take. Or if it's something that's already on a steady uptrend, then that's safe to play as well. For day trades, do those. And when I was under PDT, I always did an overnight, like every single night. Because if you do an overnight trade, that doesn't count as a day trade. And you can do one of them every single night to kind of give yourself the most trades possible. The TOS script, yes. I will look for that TOS script and try to hook you guys up. How do you pick your overnight? Well, really, I mean, you pick your overnight based on what the theme has been. And that's, I can't stress enough how important that is. You always want to trade stocks that's in the current theme. Like, lately the theme has been weed and Bitcoin. So those stocks seem to be safe. And last week, I mean, we had a lot of Alzheimer's stocks that were moving. So those were safe stocks to take overnight, because you're taking something overnight on the hopes that the theme continues the next morning. So that's safe to go ahead and do. But, other than that, if something has a lot of volume or is breaking above key levels on the daily chart, or even if something is moving really strong in after hours, there's probably a good chance it will continue to move in pre-market. So those are good strategies to utilize to take your overnights. Is Vissel safe for a swing? Yeah, I would say Vissel should be safe for a swing if you have it low. Nothing is safe for a swing if you're buying at the tip top. But if you have a low entry, then it should be safe if you want to swing it. How can you spot accumulation? It just comes down to looking at the daily chart. Like if you see certain like levels in the daily chart, like if it's been consolidating for a while, like around one certain place, it's not completely crashing down, or you get a little bit of spikes coming in it, then that's a good sign of accumulation. You look for consolidation. Um, how long have I been trading? I think it was 2018. Yeah, 2018. Um, yeah, that sounds right. I taught you more than any college. I'm so happy to hear that. Listen, I went to college. I'm not hating on college whatsoever, but I do feel like reform needs to come to the modern college system because I feel like a lot of the gen ed classes, that's just the upsell. They're keeping you there longer than you need to be. Like they're making you take a little bit of everything, and that's just to get more money from you to keep you there for extended amounts of time. Um, and there just needs to be reform all the way around. It's too expensive, and I do feel like if you learn a specialized skill, that might suit you better for this modern economy. It's the saying goes that you don't need a college degree to start your own business, but you do need a college degree to work for said business. But college does have its place and value. But I do think some reform needs to come to it. Um, but anyway, thank you all so much for everyone that tuned in. I know there was several questions I'm sure that I couldn't get to, and I do apologize for that. But a couple things that I do remember is I will look for that volume script for you guys. And if there's anything else that I have missed, just tweet me, reply to one of my tweets. I'm sorry if anyone's inboxed me and I haven't gotten back to you. It's kind of overrun and a little bit overwhelming it's hard to, look at all the messages, but I will do my best to get back to as many of you guys as I can. All right, see you guys tomorrow.